and control of labor. And control of labor. Benja anzana amakiga apa because we use the whiteboard. Amakiga kumene kuti aziona what we are also writing on the board. Yeah. Good. Thank you. So we are saying we are starting with the our course today with some of the questions that we had learned last week or last time before mid-semester, but this is in connection of the topic accounting for and control of labor. First question is what are the elements of labor? What are the elements of labor? Elements of labor? Some. The question elements, I don't know why people could not come in. Somebody's knocking. Go there, don't worry. What is the first question? We have how do we account for labor? That's a different question. And what are the elements of labor? Welcome, Timothy. Elements of labor. This we didn't have it on an exam, but we just want to go over on what we learned last time. Elements of labor. A sign of not reading. I was telling your friends that I've entered all your marks as introduction to costing, but I've forgotten them. I thought I would remember. When I was in my car outside there, I saw that I've not carried them. So I was saying, tomorrow I hope I will come. If you have a class, remind me that have you taken our papers so that I should give them to you. Loveness. Can you try elements of labor we learned last time? Come again? Idle time. Okay. The other one, who can try also elements of labor, not accounting elements for labor, but elements of labor. Michael. Okay, shift premium, good. The other one, welcome Khadija. Shift premium. Where we talk about overtime, how we do overtime when we're talking about shift premium. These are the elements of labor. Elements of labor. The other one, Khadija, we're starting with a few questions that we learned last time. Maybe we should list them down. What are the elements of labor? Love, you said what? Idle time. idle time, and the Banda, Michael, you said what? Shift premium. What can be the other one, or what is the other one? Employee taxes. These are elements of labor. The other one, that's all. What? Okay, employer taxes. Employer taxes. And what? Fringe benefits. Fringe benefit costs. Like that? So these are the elements of labor. Elements of labor. How about elements of cost? We should go back to where we started. Elements of cost. Good. Material, labor, expenses. Good. That's the elements of costs. And when we're talking about elements of labor, we're talking about that. We are talking about the elements that we use when we are calculating labor. How about the second question that is there? How do we account for elements of labor? How do we account for elements of labor? How do we account of elements of labor? James? Today you are not in class. What's wrong? You are not okay. What is the problem? Headache. Come again? With me. Good. Okay, so we are saying the first question is what are the elements of labor? We have said there are 4, and these are idle time, shift premium, employee taxes, and employers' taxes and fringe benefit costs. So these are the elements of labor. How about the second question? What do we account for elements of labor? When we're accounting for the elements that we have talked about, how do we account them? We learned last time. How do we account them? Come again? Output based pay. The other one? Time based pay. How many are there? 3. The third one? So when we are talking about the what? Guaranteed wage and incentive price. Okay, so when we are talking about remuneration, there are those. But we are talking of how to account for the elements. How do we account? We account them through the timekeeping. You remember? Yes, we account them through timekeeping. That's the first one. The second one now is what? Computation of total payroll. And this last one, come again? And calculation. And what? Allocation. Allocation of the total payroll. Is it? Allocation of total payroll. Come again? Oh, payroll costs. Good. Allocation of payroll costs. So these are the 3 that we use when we are calculating the elements of labor. We use timekeeping. We calculate we compute the total payroll, and then we allocate. Can anyone explain how we allocate the payroll costs? We learned about this, and I could even give examples of individuals in the class. Allocation. Anton, you have forgotten. I mean, Timothy. Use like, I forgot the name, but I use selling cards. I said allocation of payroll. That's what I want to explain. That. How do we allocate? We allocate basing on cost center or department for that particular or that individual comes from. For example, I even remember I gave in examples like, let's say, Michael being in accounts, Linda being in marketing. I remember such examples, individual departments. Then you take the amount that is for that particular who is in that department, you subtract it from the total estimated amount that is given to their allocation. You remember that? Khadija, you remember? Yes, that's how I said when we're talking about allocation. We take the amount that we have calculated, which we allocate to a cost center or a department of an individual. So we go to the next question. Can idle time be paid when you are calculating labor? Can idle time be paid? Yeah, okay, good. Linda says yes. And the Kalivute say what? Yes, also. Those that say yes? Those that say yes? Okay, everybody. Then let's explain. How can idle time be paid? And how can idle time not be paid?
Idle time can be paid when it's not the employee's fault. Production
Chizungu ndina ku university. Hallelujah. So what if it was an exam that I've asked you? Could you have said GJ was there? Yes, exactly what Linda has said. To say when we were saying that idle time can be paid when the problem is not for the employees, it's for the employer. For example, as she has said, of course, in a vernacular language, a language that is not accepted in a university class, saying that we can have an idle time be paid because sometimes situations like, let's say, breakage of the machine or installation of the machine or something like that, that the employer has got a problem with what we are doing. Still more, we're not going to work, but we're going to be paid. How about when the idle time is not paid? Timothy? When it's not paid. Come again? The question is this, but in contrast now. We have said that idle time can be paid after Linda had explained. And then I'm asking you the same question, but to say when idle time cannot be paid.
Idle time cannot be paid when the situation that caused the idleness is caused by the employees.
Okay. When you're just sitting, they're saying that, please, can you work? You say, no, I don't. Or else you are drunk, you can't work. Then they say, this one, we're going to deduct. Okay. Or even more measures can be taken. So we're saying idle time is not always which cannot be paid, but it can be paid for us when we're accounting for labor, when we have got the problems with the, let's say, our machines. The last one is what do we account for labor? How do we account for labor? How do we account for labor? We have already answered this question. Timekeeping. Timekeeping, computation, as well as allocation of the payroll costs. So I just wanted us to have, let's say, something in connection of what we learned or what we learned last time. So today we are going to continue on the same topic, but the subtopic of remuneration. Remuneration. What did we say remuneration is? Remuneration. my duster, I'm a bit of wood. But it's a duster, Papa. I don't even see. You just see this. Come again? Somebody should go and pick a duster if possible. Come again? So we're still talking about accounting for uncontrolled labor. Now we want to know more about remuneration. What did we say remuneration is? Salary. Salary. In fact, last time maybe we also learned this part, is it? Because you started mentioning them, of course, on a wrong. Thank you so much, Karivute. You are a good boy. Yeah. These girls are bad. How can they send a man? Ravness and Khadija, because Linda is very far. Karivute, choosing staying close to Linda, I mean to Loveness, those are the cases you are going to face. Normally you stay here. You should have not sent, you should have gone. Imagine. Thanks so much. Thank you so much. So we are saying remuneration method or remuneration, was saying it's a salary. So which are the methods that we use when we are calculating salaries or remuneration? We said one time what? Time based. Time based. Time based. The second one is what? Output based pay. Two, we have output based pay. The third one is what? It's in your book. Guarantee wage and the incentive plan. Is it fine? That's the only one? The third one? 3, good. So when we are talking about time-based pay, who can think about that? Because you know some of these things are self-explanatory. Time-based pay. Time-based pay.
If you find an individual's earnings, they calculate the hours of work times time achieved.
Okay, so we measure the performance of each employee. When we're talking of time-based, we measure performance of each employee. each employee. We just have to measure their performance. And this, we can say that we have a formula basing on that, which is earnings is equal to clock hours worked multiplied by rate per hour. It means these salaries for this time-based, it means we're going to have that formula, which is earnings is equal to what? Is equal to number of hours worked multiplied by rate per hour. Rate per hour. So that's the formula when we are calculating the salaries that is for the method of time-based pay. Of course, we should not forget that it is for quality that is emphasized. Quality of work that is emphasized. And this we can even maybe have that example that we normally have to say, we have a fixed time of coming for work. For example, 7:30 you're supposed to start work, and 5:00 p.m. you're supposed to go. So those are some of the time-based pay that we base on when we are talking about the calculations of remuneration methods of labor. The other thing is that we have flex time, where we're talking about, let's say, fixed duration of employees, to say you are going to be working, let's say, for example, 8 hours per day. So these are some of the things that we base on when we're talking about time-based pay. So time-based pay, we have fixed time as well as the flex time. Fixed time meaning you are supposed to start at this time and go knock off at this time. While flex time, you are supposed to indicate 8 hours or how many hours that particular has to do. What time he comes, that is nothing to do with you, but 8 hours has to be worked. For example, if we are talking about, let's say somebody has to work for 8 hours, somebody can choose to say, I will come, let's say 6:00 and work for the 8 hours that I'm supposed to do. Okay, they knock off at that time. While the other type of time-based pay is that you have a fixed time. You're supposed to start work at this time and knock off at this time. So these are the two, let's say, principles that we base on when we are calculating salaries for the time-based pay. Then we have output-based pay. What do you think is output-based pay? Good. Flex time. Flex time is that you are given number of hours that you're supposed to work. For example, 8 hours per day. You can choose to come at 6:00 and knock off at what? 7, 8, 9, 10, 11, 12, 1, 2. You knock off at 2, you go. Other person is going to say, I'm going to start at 8:00. 9, 10, 11, 1, 2, 3, 4, 5. So that is what is flex time. What is there is that you are supposed to complete the number of hours that you are given to work per day. That's flex time. While fixed time is that, Linda, you are going to start work 7:30 and knock off at 5 o'clock for you to get your salary. So these are the two methods that, the two strategies that we use when we are calculating the time-based pay for the remuneration of labor. Is it fine? Khadija, is it fine? Good. So we continue to output-based pay. Output-based pay. What do you think is output-based pay? Love?
Based on how much you are producing or how much you are producing.
Okay. The performance, yes, there, but how, the quantity of the performance. The output that has been achieved by each employee. The output that has been achieved by each employee. So this is what it means, and this means the administrative arrangement will involve keeping records for the output for each employee. Okay? So you can't judge to say how much has this produced, but it's due to arrangement with the management to say how much is Michael going to produce this month. So they're going to be checking on you. How much is Khadija going to produce as we are in this company? So administrators are going to be monitoring you to say, no, he has not. No, he has not. Okay. So these are some of the things that we should know when we are calculating or methods of remuneration. And then we have the formula that is there, that is earnings is equal to good output multiplied by rate per unit. This is output based, where everybody is calculated based on what he has produced. So we're saying the output for each employee. And then we have the formula that is earnings is equal to what? Goods what? Goods output multiplied by what? Rate per unit, is it? Amula munimbire chama lunch hour niri mu class. Awo kenyengo yeni anakumbangana di ma units nirije. So munimbire lunch. Thank you. So we are saying output-based pay, where they base on each employee's output for that particular time period. And then we're saying the formula is earnings is equal to goods output multiplied by rate per what? Per unit.
So much. They include quantity and quality.
In fact, when we're talking about output, we're supposed to think about quantities. For example, we are saying that we are producing, let's say, bottles of tomato puree. We have a company that is for 1, 2, 3, 4, 5, 6, 7. We are shareholders of this company. And then we have employees, whereby you are going to say that if you produce, each produces, maybe we have got 10 machines. If each employee produces, let's say, 100 bottles of tomato puree to 1,000, basing on what period of time that we're going to be paying them, maybe per week. Okay. Then you say those that are going to produce 100 to maybe 100, 1,500. This is 1,000, maybe 1,000 to that, or 1,000 to, yes, like that. It means these are the quantities of bottles each is going to produce. So we're going to say, how many have you done? Asking the employees. This week I was a bit tied up. I've only produced that. Okay, then we're going to have a rate per unit, the number of production that this first person has done. If we're talking of a unit is 10, is it? So if it is 100 kwacha per unit, or maybe 5, so that we should 500 kwacha. It means this is going to be how many? How many units? Because this is per unit. How many units are in 1,000? 10. So we're going to say 10 times 500. So how much is it? 5,000. So it means this is just an example. They can produce more. But we're talking about how we are supposed to give earnings to these people that are based on output. The less number of bottles you have produced, the less number of hours you are going to be paid. The more number of hours you have worked is the more numbers of pay that you are going to get. So this is what is output-based pay. Quantities, they calculate in quantities. Guarantee, how about guarantee now? We have written the output-based, formula. In our book, we have examples of the units, 1 unit to 100 units. Somebody should be paid 20 kwacha per unit. These are the output-based examples that we're talking about. In our book, we have examples like those. And the other one is 101 to 200 units is 45. So it goes on like that. So that is just the example of output-based pay if you are calculating remuneration. The last one, guarantee wage and incentive plan. What do you think how they calculate? How they calculate? Karivud. Guarantee wage and incentive plan. No discussions, but I'm asking you, Karivud. You want to ask from Loveness that she should say for you? No, but I've asked you. If you don't know, just say, Madam, I don't know. I can't even think about that. That's fine. Love, I understand you are the spokesperson for Karivud.
Guaranteed wages.
Mm.
Employers have been done.
Okay, good. Very good. Then Karivute now can you give an example? because she has disclosed what it is.
Simply words gifted from the employees. How great.
Michael, we should not wait for the discussions of the two. I think from today onwards, Kalivute should not be sitting next to Love. We should be sitting separately. Thank you so much. Yes, Michael. We should go back to secondary school. You are still young, I hope, because you are soft. Because you can't be talking there and yet we have asked you here. That's why I'm saying from today onwards, don't sit with Love. Today is the last day. Thank you. Michael? Okay. We can talk about, let's say, piece work rate that is there when we're talking about the guarantee wage and incentive plan. I remember this we explained the other time where we said that sometimes they can even tell you that once you have worked up to this, as the Love said, up to this, the company can think of giving you, let's say, bonus. Okay? So they will give bonuses based on what the targets you have reached. We have ever heard that maybe our parents have ever said that, hey, I've received a 13th check. This maybe twice salaries can be given to this particular. These are incentive plans that they should be encouraged, that they should continue with them. They are doing well. The organization recognizes them, that they know what they're doing. So these are some of the pay that are sometimes given, and we as the cost and management accountants are supposed to calculate when it comes to remuneration methods. Sometimes we can also think about, let's say, compensation system, where we talk about, let's say, average employee working on a job, which is expected to have a minimum wage of something and a bonus. You said that Kalivute, Loveness, and Khadija are working in the same department. And you say, based on what they are doing, we're going to give them an incentive of this much. While Anthony, Michael, and Linda are in another department, where the cost and management accountant is not going to give them the same incentive that he has come to you. They are going to say, no, Kalivute is too childish, that he doesn't work well, but these two girls are good. Then they are going to say, because of that, they are going to say the incentive is the addition of a 20,000 on their salary. While Linda, Michael, and Anthony are going to have, let's say, a 50,000 on their salaries. You have ever heard people think, how much have you had? Others are going to, but I don't know why this me. But we're in the same organization. People do that, they complain. So you should not be one of them that you should not have or should not impress the company that they should think about an incentive plan for you. So this is guarantee wage and incentive plan. Any questions? Linda? So on that, we also have a group bonus scheme under the same. A bonus scheme where you share equal benefits for the employees. You say for them, Linda, Michael, and Anthony, they are going to have this package for their incentive, and then you share among them equally. So this is group bonus scheme based on the guarantee wage and the incentive plan. Then profit sharing. It's almost the same anyway. Maybe Karivute, you can explain to us now. Profit sharing scheme on the same guarantee wage and incentive plan. Can you explain to us what it is?
It's when the individuals in the same organization sharing
You have ever seen people working or doing, let's say piecework together. And then when they have worked together, the owner says, no, but you have done good work. Let me give you this money on top. So despite being given according to what you have done, but this individual thinks about giving something in appreciation, it means that amount that has been given to all of you is going to be shared equally, isn't it? Even companies do the same. To say, no, our target for this year to sell, let's say, tomato sauce for this company was about 600,000 bottles that we aimed at, that we are going to make this profit. But instead, we have made 1 million bottles, and this is the amount we have done. Then we are supposed to at least appreciate, give those that were involved in working, to say the profits that we have done, let them be shared equally amongst themselves. So this is what sometimes happens when we're talking about the guarantee wage and incentive plan based on the profit sharing scheme. These are normal things that we are involved with. But when it is on the book, when a lecture is in front of you, it's something different, as if it's a new subject. No, they are the same. They are the same. So we have an example on that. Everybody should have a book. Karivute, where is your book? Linda, are you there? How about Anthony? I mean Timothy. I don't know why. But Anthony is in the third year, second year, I think. I think he's in third year. Sorry, my dear. Timothy, please, I'm elderly, so just be reminding me every day, but I will try to remember, sure. So we have an example that were given to us. We're given a basic pay of 40 hours. This is on what? On the remuneration. Example. I will not write everything on the board, but I will just write the main ones, okay? So we are saying, what is, can anybody read the question? Linda? Linda Salim Pabuku.
The following information is details of the cost and related to the production. One, basic pay for normal hours, where the hours are 50 an hour, which is 2,000. Overtime, 10 hours at 10 pounds. Difference in time. Group bonus payment, 40. Some 2,400. Although paid for 40 hours is normal time, the worker was in fact unable to work 6 hours due to machine breakdown. Five, analyze the total cost into direct and indirect.
So, no. So, that is what we should think about, and then the solution is just there. Have you seen it? The table. The table is Karivuta, are you there?
Yes.
Good. Khadija? Good. So we're saying, they're telling us that this person had a basic pay, again, did overtime, also had a group bonus payment that involved him to be paid. So we are on the solution now. We have the 2,000 that is there, that somebody worked for 40 hours. And they are telling us that basic pay for this particular is that we have the direct labor. Why is it that it's 34 hours? Why 34 hours? Linda, you read. Why 34 hours? This one has been calculated, and yet he worked for 40. Basic pay for normal working hours, normal hours worked 40 at 50 per that. But the calculation for this basic pay is 34 hours times 50. Why?
The worker was unable to work.
Exactly. You read, that's why I thought maybe you still remember. The worker was unable, okay, you remember, unable to work for 6 hours due to machine breakdown. Due to machine breakdown. Don't you have an argument on that to say because idle time can be paid? So they are saying basic pay for this one is 34 hours. Loveness, we went out. Can you explain to us why 34 hours times 50 for this employee?
Because the employee worked for 40 hours at 6 hours.
Yes. So this is exactly what we are saying. Look at the calculations. Direct labor is 34 times 50, and that is 1,700 for this labor, employee. And then we should also calculate the same 6 hours by 50 because this was idle time and this is indirect labor, isn't it? Yes, because it should be subtracted from the allocation of the labor. He is paid, yes. Idle time is paid, but he is paid into the indirect labor. Clear? Love, is it fine? Karvute? Good. So that's why he's paid. But it's because of it's indirect labor. So 34 hours is paid because the other time is not calculated as the direct labor. That's why it's 34 hours. Overtime pay, according to the 5 hours that he did, we have that, which is the 375. But they're saying 5 hours is only paid on direct labor. Why? Why is it that only 5 hours is